Aloha, everyone. Welcome to HAMB's webinar today with Angel Oak. We've got John Jaminad, Larry Mize, and Don Noble, as well as, of course, President David Ige. So we'll just give it a few more moments. We are so happy that you guys chose to join us today. We know you've got a busy morning, and we're so excited to have you here. We'll give it a few more moments as I do see folks starting to log in. So, John, tell us a little bit about where you're from today and what the weather is like, because we're having a storm.
Wow. Okay. Thanks, Judy. Yeah, I'm John Jaminad, Regional Vice President of Sales here at Angel Oak Mortgage Solutions. I'm actually in one of our operation centers here in Dallas, Texas. So if you've been watching the news lately, it's probably about 107 today with a heat index of about 115. So we'll probably break a record this summer with the amount of days over 100, but we're really honored and happy to be here, Judy, so thank you.
Awesome. And then Don, you're here locally. You're out of Hawaii Kai, and we've got some rain here at the airport center. What about you in Hawaii Kai? Is it raining?
Yes.
Awesome.
Island-wide.
And
we're all getting rain.
You're in San Diego today, correct?
I am actually in Tennessee today.
Oh, you are in Tennessee today. You're in the South. Awesome. Well, the last time that I was in Tennessee and I flew in, and I just remember it was all trees. It reminded me a lot of Hawaii, actually.
Yeah, we do have a lot of trees, a lot of mountains over on the east side. Today it is 95 degrees with a lot of humidity, overcast. And so it is not as fun as it usually is. We're getting a lot of that heat coming over to the region. And my name is Larry Mize. I'm a regional vice president at Angel Oak as well. I run the Northwest, including Hawaii. And again, like John said, we're glad to be here. We appreciate y'all's support, and we appreciate the time. So we're looking forward to this.
Judy, a little tidbit. Larry and I have been at Angel Oak a combined 21 years.
Wow.
Yeah, and we've known each other 24.
24, yeah. We go back a little ways. And
that is so awesome.
What's one good thing that's great about Angel Oak is that a lot of the people that we do have on our team are people we worked with for that 20 years. So we're like a family, and that's important to us. So it's really, really nice to be able to be a part of that.
So I want to ask you guys a question.
Sure.
I want to ask you a question. How did they come up with the name Angel Oak?
Go ahead, Larry. You want to take it? So if you look at the logo, it's a version of the Angel Oak tree in Charleston, South Carolina.
Oh wow.
Yeah. So that's, I think, who was it? Was it Mike, the owner, or was it someone that said they were looking to name the company, and then someone was, I guess it was in Charleston that weekend, they saw the Angel Oak tree, and that's how they came about.
Yeah, that tree's about almost 500 years old. The idea of the tree is it's just got so much depth and roots and branches. And that's what we have because Angel Oak is vertically integrated. So it basically helps tell our story. So every one of those white pieces in the background is some type of branch of Angel Oak that we have tried to build and cultivate, including capital. The mortgage solutions part, that was named about 10 years ago in one of our owner's offices when we just decided that we were here to have a solution in the mortgage industry to bridge that gap from hard money and conventional lending. So that's kind of where that came from, because we knew that we had the answer, or could be there for mortgage brokers and bankers and clients. So
awesome. That is, I think that's wonderful, and that fits exactly what your company is like. So it looks like we're at about 10:05, and we've got a number of attendees that have already joined, so we can go ahead and get started. So once again, we'd like to thank everyone for being here today. We are with Angel Oak and Angel Oak Mortgage Solutions, and today we have with us John Jominad. And John Jominad is the Regional VP of Sales of Angel Oak Mortgage Solutions. He's an expert and reliable consultant supporting brokers and correspondents. He has spent over a decade focusing on the non-QM lending space. And as he puts it, it's all about what he knows and what he loves. John has an impressive, diverse background ranging from retail and e-commerce to marketing and business development. The majority of his experience has been in the wholesale lending space. His favorite thing about Angel Oak is his ability to communicate through all channels of business, from sales to operations to marketing. His hobbies include playing golf, staying fit, cheering on the New York Yankees, and John knows firsthand about utilizing non-QM can grow your business and keep your pipelines full.
Thanks, Judy.
And say hello, John. And
Hey, aloha, as you said earlier. So,
and then we've got Larry Mize. Larry Mize, Regional VP of Sales here at Angel Oak Mortgage Solutions, is an expert and reliable consultant supporting mortgage brokers and correspondents. Larry has 20 years plus in finance and real estate, starting in subprime in the mid-90s. Larry worked at Star South Funding in 2000 until 2005. He then went into retail wholesale with People's Home Equity, and starting with the ground level, helped them grow from less than 10 million to over 350 million per month as Vice President and Director of Solutions. His experience in retail, wholesale, mortgage sales and operations, conventional and non-prime lending has helped Angel Oak Mortgage Solutions set the standard as the leader for non-QM alternative lending.
Thank you. Nice to meet everyone. Aloha.
And then, of course, we have Dawn, our boots on the ground here. Dawn Noble is an account executive with Angel Oak Mortgage Solutions. She has over 20 years of experience in the mortgage industry, specifically with non-QM loan programs. She is part of a company that provides financial opportunities to underserved borrowers and is excited to be part of those helping in Hawaii. She joined Angel Oak because she loves most about helping people's happy dreams come true. Dawn also appreciates the positive culture that Angel Oak has cultivated over the past decade and is well known for. On a personal note, Dawn enjoys hiking, yoga, and has a unique background in a previous work life of providing midwifery services. Dawn can help you grow your business through non-QM options as another way to keep your pipelines full.
Mahalo, Judy.
Awesome. Welcome you all. And of course, we've got David Ige, president of HAMB. Dave, go ahead and let us know about our sponsors.
We want to first of all thank Angel Oak for jumping on and making time for us for our webinar. With the new way of communicating knowledge, these webinars are so important. And for those loan officers that have gotten on this webinar, let me tell you something. This is the time to basically get your education. If you're not really busy, now's the time to find out what additional ammunition can I put in my hoster right now, so that when that opportunity comes, when somebody calls me for a situation that my conventional loans can't handle, you'll have an answer. And it could be Angel Oak will have a program for you. So we really do appreciate Angel Oak, as well as all our other sponsors, our platinum sponsor, Acura, Bank of Hawaii, Champions, Finance Factors, Freedom Mortgage, Ivy Costa, Mutual Underwriters, VIP Mortgage, and also all our gold sponsors, Ameris Bank, Kind Lending, NewFi Wholesale, all of these sponsors, Remen, all these sponsors keep us going and happy. And we're grateful for them because they believe the importance of wholesale lending. And they also believe in the process of loan officers and not just a banker. Okay, that's one of the big things. That's why you should really thank our sponsors. They're here to help you solve problems, help you to, like John said, hey, one of the things he loves doing is trying to figure out what's the scenario you got, how can I put that deal together. That's what these guys are for. So we're grateful to have Angel Oak I'm turning time back over to Judy. You can turn it over to them, and we're gonna see what they've got. And I know there's a lot because I've been to one of their presentations, and Larry's filled me in on a lot of stuff already. So go ahead, Judy.
Wonderful. Thank you, Dave. Thank you, Dave. So just a couple of announcements before we get started. So remember, everyone, please make sure to log on to hamb.org, where you will find our most up-to-date events calendar. Upcoming this month, we've got on 8/16, we have the joint education event with the Appraisal Institute and HAMB at the Japanese Cultural Center, where we will be discussing some appraisal issues. And then, of course, our HAMB conference, 10, 12, October 12 and 13, where the 12th will feature David Luna, and we'll be offering our CE course, of course, for MLO recertifications for 2024. And then on 10/13 is the joint golf tournament with the Appraisal Institute. So calling all members, please make sure that you sign up and check out hamb.org. So with that, I'll go ahead and turn it over to Angel Oak for John, Larry, and Don. Take it away.
Thanks, Judy. Thanks, David.
Thanks, Judy.
Hey, you know, your CE class in October, David Luna's worth the price of admission.
You'll need to be online.
Yeah, I've been part of his CE classes, and I've seen people that, oh, I don't want to do it in person, I'd rather do it online. He makes it the most enjoyable CE that you have to do, and it's well worth it. So, and continue to support your local organization. It's really critical, and all what you're going to learn here today and all the other sponsors and stuff like that can really help you close more loans. So just a shout out to you guys. Thank you.
Thanks.
Well, good afternoon, everyone. My name is John Geminard, Regional VP of Sales here at Angel Oak Mortgage Solutions. We're going to go into a deep product dive today of our bank statements, which is our most popular program. It's about 60% of our production, and it's a really, really easy loan to get done. Everything we're going to do here today is going to be driven from our website. It's really easy to use, easy to navigate. What else is there? What else was I going to say? We're going to teach you highlights of the programs. This is going to be very interactive. This is being recorded. This will be sent out. So if you're missing anything, this will be sent out. We're going to cover highlights of the bank statement program. We're going to answer your questions. We're going to tell you what we like to see on a 1003 and what we like to see on a credit report. And then we're going to show you some really cool tools that we have to get pricing, to submit a pre-qual. And the most important part is, stay to the end, this is a teaser, is the marketing information. It's how we can help you grow your business. And Larry, how much does it cost them?
Zero.
Right. So
Effort, just a little effort.
Just a little effort, you know. So we're going to tell you how to work with underserved borrowers, which are self-employed borrowers, and we're going to show you how to work our marketing portal, which is an underutilized portal. So let's get started. Everything we're going to do here, as I mentioned today, is from our website. Really easy to use, very interactive, doesn't cost anything. You don't need any sign-in logins or anything like that. And today we're going to talk about our bank statement program. So Larry, I don't know if you want to take it and just talk about some of the highlights.
Yeah, so bank statement, just in general, let's just talk about what kind of borrowers these are. Because obviously some people don't know what a bank statement program is. But these borrowers are specifically for self-employed borrowers that have typically written off too much on their tax returns where they can't qualify for a traditional loan. So, you know, it's a very underserved market. And John, I think that there's 36, or I think it moved up from 36 to about 40% of people in the United States are self-employed.
Larry, there's more self-employed borrowers than there are VA borrowers. So, and I'll just throw out a couple of statistics here. In 2020, new business applications grew by over 24%. That was the largest increase in over 10 years. And in 2021, new business applications grew by over 22% over 2020. So you have the fastest growing segment of borrowers that are now eligible for our program, right, Larry? And these are great borrowers. They just decide to take advantage of the tax laws in this country. And, you know, it's just, and they're great borrowers. Our average credit score is about a 740 for self-employed borrowers, and our average LTVs is 73, DTIs in the 30s. So it's a big group of untapped, underserved borrowers out there, and it's extremely important that you know about that. So go ahead, Larry, talk about some of these highlights, but great information.
So, we can go up to loans up to 3 million, and we do make exceptions. That's one thing I would just like to talk to you guys. We have a common sense approach. So if you see something on here that, there are some hard stops, but for the most part, if it makes sense, we can give you an exception, whether it be loan amount and sometimes even on a credit score. So again, common sense that's one thing about Angel Oak is we are vertically integrated, which means that we sell to ourselves and we have the ability to make exceptions if we feel comfortable. So that's a huge plus for us because and a lot of these loans just really don't fit the box every time. And that's where we are here to help think outside the box. So with that being said, I'll just run through some of these bullets. Like I said, 3 loan amounts up to 3 million, minimum loan amounts of 150 on this particular product. We do allow 12 or 24 business or personal bank statements. So whether it's business bank statements or personal bank statements, we can give you the option to use either one. 2 years out on that foreclosure, short sale, or bankruptcy and deed of lieu. So typically that's our seasoning requirement for that. And all of our loans are on a 30-year fixed mortgage. So there are no ARM products for this program. So it is only 30-year fixed. And like I said, you do have to be self-employed for this product, and that is a minimum of 2 years self-employed with us. So all those borrowers that John was talking about in 2020, it's right now might be the best time that you can go in there, because typically in a business, people's first year, they're not making that much money. And if they are, they're writing everything off. And then the second year is usually when they start making their profitability. So that 12-month bank statement program, it would be great for some of those borrowers right there.
So Larry, you just touched on that, and I think it's worth kind of asking this question now. So what's and if you tell me 12, I'm going to hang up on everyone here. So what's the difference between 24 months and 12 months?
Typically, the 12 months, we're able to see like that example right now. If we looked at a 24-month bank statement program, they may not average, because that first year self-employed, they're not making any money. But that last 12 months is where we're really able to focus and pay attention to what their business is actually capable of, and be able to get some true value on that income.
Yeah, and the great thing about it, all we're asking you to do is get 24, right? Get 24 months and let us, Larry, you can probably talk about this right now. Who's going to calculate the income for them, right?
Guess what? Angel Oak calculates the income, and that income that is calculated is the income that's used in underwriting. So that is a huge benefit doing business with Angel Oak. Is you send us the 1003 credit and the bank statements. We calculate this income for you. That way, before your borrower goes out purchasing a home, they're able to really know if they're truly qualified for this program and what their buying capability is. So, and obviously everybody knows that our referral partners are our most important. And if you're going out putting your name on a loan that's saying it can close, then we want to make sure that you're able to support that, and that is a loan that was approved. So, and John, I know we're going to get to it later, but here at Angel Oak, every account executive, in this case Dawn, is going to approve that loan before you even submit the loan into underwriting. So we do not have an automated system. Everything is basically manually underwritten, and that's why we can make those common sense decisions to get exceptions. So
yeah, Larry, a couple of things there about exceptions. 30% of the loans we close here at Angel Oak. So as Larry's covering a lot of these highlights, you're going to rely on Dawn, right? You're going to rely on Dawn because we know what kind of exceptions we get. So 30% of the loans we close here don't meet our guidelines. And to back up to the income, Larry, is, and the pre-qual is we basically do a pre-underwrite. But from an income perspective, like you said, their business might be thriving in the last 12 months. Therefore, we won't use months 13 through 24. And we're going to tell you that up front. But maybe 24 months, maybe all 24 gives them a little bit better income, or maybe there's a trend where if we only use 12, but we can see over 24. So I'm going to give my public service announcement right now. If you know you are going to meet with a self-employed borrower, you're going to grab their tax returns because that's traditionally what you've done, but grab their 24 months of bank statements and let's go down those parallel paths. But one thing we're going to prove is you're going to increase that borrower's purchasing power by 3, 4, even 5 times as much as using their tax returns. And who doesn't love those, those luxury homes that are being purchased? Those are self-employed borrowers. So I know we got a lot of things to do. Yeah.
John, is there a different rate between 12 and 24 months?
It's a great question, Dawn. Right now, Larry, is there? No, there's no rate difference between 12 and 24. But again, if you can get all 24 up front, you're not calculating that income, and we're going to determine what months to use, 12 or 24. And one of the other things we like to do, I was just on a webinar earlier today, is your account executive is your confessional booth, right? That account executive is going to work with you, and you need to tell them everything, because half the loans we get, unfortunately, because people don't proactively market to self-employed borrowers, are loans that the borrower has already been pre-approved. They're out shopping, they go under contract, you get their tax returns, and guess what happens? They write off more than they told you on their tax returns, and now you're calling Dawn at Angel Oak saying, oh my God, I got to close in 2 weeks. Here are their bank statements. So.
Okay. The only thing I'd add to the 24 months, I personally always ask for 24 months because you also never know when you may be working with someone that's seasonal. If you're working with somebody that's seasonal, then we like to see a trend sometimes about somebody maybe only making money 6 or 7 months out of the year. But if it's typical for their industry, hypothetically, lawn care service, somebody may be busier in a 6-month period than they are in a different period. So I always ask for 24 months because the last thing that we ever want to do is ask a borrower for something and then go back and ask them for something else. So asking for 24 months is getting you ahead of the curve. So
here's a question for you guys that comes up a lot with my LOs out here. Why the market, of course, is become so competitive with non-QM. And John, you just mentioned that 30% of the loans that we do is how do we stand up in the competition with pricing?
Yeah, pricing,
for non-QMs.
We're priced really well and competitive to anyone out there, but you also have to look at from a standpoint of, how long has that non-QM lender been around? How seasoned are they in this business? If they've just gotten into this, and if business starts to pick up, are they going to go back to focusing on their conventional business? So those are all things. And we already have a question coming in here, Larry, and it's a great question. So Darren's asking, what if a borrower has multiple banks and multiple accounts, and can you use 12 of one and 24 another? It's a multi-question, but I think you know where I'm going with this, Larry. So
yeah. So the question being, can you use multiple statements? You can use multiple statements if you have multiple businesses, typically. So, yeah. but we have seen also people. What we get worried about is money being transferred back and forth from different accounts. But a good example is somebody sent us a deal that it was a franchise owner that owned 2 different Subways. Those money did not intertwine, and we used both of those different accounts because they held their value on their businesses in general. So
yeah, so Darren, hopefully that answers your question, and you'll keep the questions coming. We're going to keep this as interactive as possible. Larry, talk about obviously purchase, cash out, rate and term, refinance. Talk about even delayed financing, because there are still pockets of this country that are really, really, really hot markets. Talk about how delayed financing works.
Yeah, so a couple things here. One is, obviously purchases are pretty self-explanatory, but cash out, we're actually doing cash out 6 months after ownership on appraised value. So that's pretty huge, and that's something that the market doesn't see a lot. And as far as delayed financing, I'm sure you've seen somebody have to go out and purchase a property. They bought it for cash because they got a deal on it or they needed to get it financed quickly, and they run out and purchase that. We will actually give you the LTV that they qualified for. So if somebody goes out and buys a $500,000 home for cash and they qualify for 90%, then we can get you a loan at 90% and replenish their cash that they used to buy that property. So good one, John. There is a couple of questions popping up, so I'm going to just cover this. Borrowers can own as little as 50% for their business bank statement program and 25% on their personal bank statement for the program. So your ownership is only 25, up a little bit, John. Up a little bit, you'll see it. There we go. Borrowers can own as little as 50%. And so the question that came over is for personal statements, is there required sourcing for large deposits? So typically, and we'll just talk about personal and business, but on a personal account, typically we'll see transfers come in from their business account, and that comes in directly into their personal account. So we're seeing that. As far as sourcing large deposits, if it makes sense, we talked about common sense earlier. If you're seeing people that are making large deposits because maybe they got a contract and they do that every few months, then we can use those large deposits, but we do want to know where that's coming from, and it has to justify for what they're doing in their business. Again, it has to make sense. If somebody's got more of a cash business and we're seeing that cash being deposited into the bank accounts, then we allow that. But again, it has to, if you're a financial advisor, we're probably not going to let cash deposits be used on those type of products. Again, it just has to make sense. So, John, let me just keep rolling through the bullets.
Sure.
Okay. Owner-occupied second homes are allowed. John, can you scroll back up? No, you're good. Second homes are allowed. 1099 option is available. And then one of our nicest features right here is a 40-year interest only is available. So with the rates the way they are today, a little bit higher than normal, some people would like to take advantage of that interest only payment and then come back around when the interest rates do settle, when they do, and then possibly refinance and just make it more affordable for them and something that they can actually afford to get into, because those bigger houses with higher interest rates are sometimes a problem.
Hey, Larry, a great feature, sorry about that. A great feature of our 40-year interest only is it will recast at any principal reduction at all. The next month it will recast. So that's always a nice feature too. So you have a great month. And what happens with self-employed borrowers, they're very cash flow oriented, right? So they have a great month, 1 month, take a chunk of change and put it towards your principal and it'll recast. Maybe you don't have a great month the next month and you're just paying your interest only.
And the other thing I'd add about that is the first 10 years is interest only, and then it converts to a 30-year fixed note after that. So you're still on that fixed rate if they do keep that mortgage. So just jumping down to the next bullet point here. Most loans are qualified off the expense factor of 50%. What that means is we look at the deposits on the bank statements. So if someone deposits 50 grand a month, we hit them with a 50% expense factor. We're going to say that they make $25,000 a month in that scenario. Companies with lower expense factors will require a CPA letter or a tax preparer letter. So what that means is we do allow the expense factor to go down below 50%, as low as 15% in some cases. That would require a CPA to support that expense factor being lower. And a typical person, like you're thinking, who would have a 15% expense factor? Real estate agents. It's a great example. So those guys, they're holding their license with a broker, and they have really literally no overhead besides some of the marketing material they may be working on. So we let them go down to about a 15% expense factor, which is great.
Hey, Larry, the funny thing about that is 9% of the loans we close on our bank statement or 1099 program are actually realtors. So, you know, I always say if you want to, well, we'll talk about realtor presentation later, but remind me if I forget.
Don't worry, I won't. We've been working together 20 years, so I know. So. And then we do have some areas that you know that are that go up to 70%, but that's a very small group. I mean, I think John, if we remember, is like less than 1% of our total portfolio that gets hit with that, right?
Have higher, yeah, that have higher than a 50% expense factor. Yeah,
that is correct.
But the beautiful thing about that, Larry, we're gonna have them fill out a business questionnaire, and based on that, at the pre-qual stage, we're going to be able to tell you what they will qualify us for an expense factor too, and then that obviously calculates the income. I have a question here from Darren again, and thank you, Darren. His question is: would someone that owns a lot of real estate investment properties be considered self-employed? I have a client that owns more than 10 doors and has rental coming in consistently. Me personally, Larry, I would direct that person probably towards our debt service coverage ratio program. You know, we could try to go that bank statement route, but more times than not, it just confuses things because you need lease agreements then, and you know, we're going to require just a lot of different stuff versus if you want the debt service coverage ratio program, we don't care how many properties they have financed. We don't care about income. We're just looking at that subject property and how that subject property cash flows. So Darren, you can get with Dawn, we can get together and talk about what's the best way to go. But me personally, and when I say personally, we direct you and your borrower in the best way that fits them rate wise and maybe convenience wise too. So
yeah, the only time that we would probably allow someone to that has only rental income and things like that is if they own some commercial space or something like that, or if they have a true business. But if they're just renting out properties, we're always going to try to push that to the DSCR. So
yeah,
good question though. Great question.
Yeah. David loves the 40-year IO. You're welcome. Larry, I did want to talk a little bit about, ask you a question because it always comes up. It hasn't been asked here, but it always comes up. What if one borrower's self-employed, the other's W-2'd? Can you do that?
Absolutely.
Yeah.
We actually, and if that income's coming in on a personal bank statement, we'll actually take that net deposit out, and then we will give them the gross deposit on their 1003 or their gross income on that 1003. So if they're on a salary for 120,000, then that gross salary would be 10 grand a month, and we would just back it out of the personal bank statements. So.
Yeah. And Larry, you know, we talked about how many people are signing up for new business applications. We see a lot of examples of people who still keep in their daytime job and they're working their side hustle, right? And that side hustle is starting to pick up, and they're going to say, you know what, I think it's time for me to either keep both or whatever. As long as we allow that, same borrower, we allow them to be W-2 and self-employed, as long as that self-employed income is 30% or greater of their income, we will allow them to go bank statements, which is huge. That's a big benefit. So
yeah, one thing also that I didn't see on here, John, is on these particular loans, just sometimes you do get access. We don't require a 4506T on these products. So we're trusting that they have filed their taxes and everything like that, but it's not something that we require. A 4506T is not needed on there. We also allow non-permanent resident aliens on this product. And then also we do allow non-warrantable condos. So that's a big one. So you guys, if you have a non-warrantable, be sure to reach out to Dawn and give her your scenario, and we can try to help. One thing I will tell you is that on that DSCR program that John mentioned earlier, we allow condo tails on that product. So maybe at a future date, we'll have some more webinars like this, and we can cover more in depth on that DSCR. So, well, great. Looks like we did get one question about can we blend personal and business bank statements? We cannot blend personal and business. We can allow if somebody's running a business possibly, and we calculate income on that, and they have a bunch of rental properties, we may use a personal or a different account to offset those payments or to exclude those payments from the DTI. So we do allow it if it's geared more towards rental income. So
Yeah, most of what we do are business bank statements, but there's again, we do this all up front. We're not pressing and guessing if we can get this deal done, and we're not guessing on income. It is all done up front at the pre-qual stage. As Larry mentioned earlier, it is all done. We're looking at the 1003, we're looking at the credit, we're looking at, and we can go over those, Larry, did we, the 1003 and credit stuff?
I was about to.
Go ahead, I'll let you cover 1003. I'll talk about credit.
All right, that sounds great. So when doing these loans with Angel Oak, we want a couple things here. One is we want you to leave the income blank until we vet through those bank statements and come out with that income for you to plug into your system and know what your DTIs and everything like that. So that's the first thing. The other thing is always make sure that their employment section is filled out. And once you do fill it out, make sure it matches our business bank statements that you have submitted to us. So it does get confusing sometimes when you see an employment section and then you have a different business account. So be sure to fill that out as well. So a complete 1003 is always great, but the other thing is make sure that you're putting in, if they're renting a home or a property, then make sure that information's in there. I know that everyone probably is used to and is acclimated to, Fannie Mae and DU and DO and LP, and you guys are geared for less is better. Well, not here at Angel Oak. We want everything to be on that 1003. We want to know if they got an extra 15,000 in reserves. We want to know every piece about this because we use compensating factors to make those common sense exceptions. So it's really, really important that you fill all that out. So that's typically sometimes what will delay getting an answer on a pre-qual is an incomplete application. So just try to do your best to fill it out to the best of your ability. But if there's any gaps, we'll get those cleared up while we're working on getting that approval out to you. So.
Yeah, Larry, great points. I mean, like you said, we usually look at 1003s that have been massaged through DU, LP, and not a lot of information is on there, and where they're living and how they're paying is critical of what we do look at. When it comes to credit, as we said up here, I think the minimum credit score is a 640. We have LTVs and tiers, so those, and we'll go all the way up to a 90% loan, one loan, no MI. I think that's critical also. But when it comes to credit, what we're looking for on the credit report are trade lines. We either want 3 for 12 months with activity in the last 6 months, or we want 2 for 24 months with activity in the last 6 months. So, and a lot of times people say, well, I don't have it. Get with your account executive. They might have just stopped paying on a car note and they have a new car note. We can tie the old car note and the new car note together. So we're always looking at, creative ways to get things done. So, but that's what we look for on the 1003 in the credit report.
One great thing I just want to add, John, that I want everybody to understand is, we've covered a lot of information just on this one page. The most important piece that you can take away from this is we are the industry experts, and we can make sure that this information is covered when we look at your deal. So we're going to make sure that is a great loan. As John says, it's our calling card. It's kind of when we write up a deal, we expect it to close because we vetted through everything and basically pre-underwrote the file to a certain degree. So.
Yeah, Larry, the questions are still coming in. If we don't get them answered, what we'll ask Judy and David to do is send them to us, so we'll get them answered. We're 20 minutes to the top of the hour, so let's talk about, it's great timing here, Larry. Let's talk about how do we get a pre-qual, or let's talk about rates, and let's talk about how to submit a pre-qual.
Okay. So one thing that you want to do is go to our page, angeloakms.com. Click on the non-QM quick quote button. It's going to be the second one from left to right there. And then it's going to take you to this page. And then typically it's set at a broker relationship, which 99% of our people are out there feeling that our relationships are broker. And then we're going to just run through a loan scenario. You just plug in the loan amount, the credit score, the LTV, select your state. And then as you scroll down, you're looking at the property housing history, what kind of unit type it is. That's where you would put a condo in there. And then here's our income documentation with the bank statement program. Owner occupied.
Larry, I was on a call with Jerry earlier. We did a webinar, and he says his 8-year-old daughter runs scenarios on quick quote. It was great. It's that easy to do, right? I mean, look at this. This is what we did, and it's displaying what we can do. And you can put in your comp plan here. I will tell you this, we're seeing a lot more people go borrower pay because people are obviously more rate sensitive, but we have different options for you. And you can see what it's displaying here. You requested an 80% LTV. The max based on that borrower's credit score, we can do a 90%, and we have 7.875 is a par rate on Bank Statement Elite. I'm hearing conventional rates are in the 7s now anyway. So, and if your borrower has, unfortunately, a credit event in the last, 25 to 48 months, we'll put them on our bank statement program and still move that borrower forward, knowing that somewhere down the road, you can refinance that borrower. Yes, you can refinance doing bank statements. So,
hey, John, yeah. Guess what? Yesterday, one of my brokers said that they got a rate quote on FHA at 7.75 yesterday. So and this is not providing tax returns. This is just providing 24 months of bank statements or less, 12 months. So Larry, this is where you can go get quotes 24/7. This is available. You don't need login credentials, right? So everyone wants to know, how do you get a pre-qual to us? So let's. One thing I'll real quickly add, John, you can do this from your phone. So if you're out in the field and you're talking to a realtor, you can pull this up immediately on your phone to get an idea on pricing and loan to value right here immediately.
Yeah. So Larry, Eli's asking a question here. It's a great question. On a cash out refi, can we use the cash out for reserves?
The answer is yes.
Yeah, there you go. Eli, thank you. Great question. All right, so for ease of purposes, here's your rate stack, right? So we're just going to click on the par rate.
One thing, John, if I can jump in real quick about the cash out, is that it does not go up to 90% loan to value. That's 80% loan to value. So keep that one in mind.
Yep. Thank
for
you.
your bank statements.
Yep. And so then you just click on the select option here, and we're back to step 2 of this. So step 1 was rate quotes. Step 2 is, okay, I don't have a MISMO file, John, so what am I going to do? I'm going to click on the next button here. The next button here. So Larry, got another question. We'll get to this question about bankruptcies, Judy, after we go through this. And all you're going to do is you're going to pick your account executive, Dawn, put in your company information, the loan officer's name, NMLS, your phone number, your email, the borrower's information, and then it's just easy as dragging and dropping your 1003, your PDF of your 1003, your PDF of your credit report. If you have a 1008, great. We don't require one. Anything with a red asterisk here is we're going to require. If you could zip your 24 months, drag them and drop them here. We have enough space there. And then there's a business questionnaire, because on every bank statement loan, we require a business questionnaire. And I think it's maybe about 10 questions, not even. So
not even.
Yeah, pretty easy to fill out. So we'll get to your bankruptcy question here. So if it's a BK7 on our regular bank statement, we just need 2 years seasoning from the discharge date. If it's a 13 on our regular bank statement program, all we need is 1 day out of the BK13, as long as the filing date was greater than 24 months. So Hopefully that answers that question. Great question. And then all you're doing is hitting submit. And the minute you hit that submit button, that goes to Dawn. Dawn's going to start looking at your 1003, your credit report, and then she's going to forward the bank statements to a team of experts that we have, and that's all they do all day is calculate income on bank statements. So, and that's it. And usually within 24 hours, we get that calculation back, and no more than 48 hours, unless there's questions, you should have your, what we call a quick call, which is basically known in the industry as a pre-call. So it's really pretty easy. And again, as Larry mentioned, that's the income that gets used throughout the entire underwriting process. They're not going back to recalculate any income. So it's a pretty easy proposition there. So, and again, you don't need any login credentials for the quick quote, but you do need login credentials. We're going to talk about, we talk about serving an underserved market. We're going to talk about an underutilized section of our website. And here you actually do need login credentials. You need to be an approved Angel Oak broker. And I'm just gonna, Larry, why don't you fill the airspace here while I
Yeah, no problem. So yeah, this particular piece, you do have to be approved with us to get credentials. And right here, we're just going to cover a little bit of our marketing options. You have marketing, just ways for you to go out and utilize our products and our flyers with your logo and your information on there. So you're basically marketing Angel Oak programs with your information, your contact information. It doesn't have Angel Oak's name on it anywhere, and it's really just designed for you guys to go out and generate business. And it's probably one of the easiest marketing that I've ever seen, because John, you can go ahead and hit it if you want to.
Yep.
But on the flyer section, you know, you click on one of the flyers and you can see all your options right there. But we can just, you put all your information in the section one time to the left, and then after you do that, it's going to stay in there, because this is going to be an ID and password that you have. And then, like I said, you can upload your logo. And then if you're looking right above the flyer right there, there's a select a flyer drop down and a download button, and you can literally select from any one of those flyers that you saw there. Our marketing team is fantastic. Can't tell you how great they are. If you have anything that you wanted, specifically done from a marketing standpoint, or added to a flyer, or in general, just even making up your own, we can help you guys create that if we need to. Because
yeah, Larry, so I'm sorry, I just changed my name on this. Click save to see changes. My name's now on this flyer. So, and as Larry, I don't know if you mentioned it, but if you fill in one flyer on here, it populates all these other flyers, as you can see. So, and Larry, there's another question in here. So before we go to social media, why don't you talk about condo hotels? We briefly mentioned it, and talk about lava zones, Larry.
Yeah, so we do allow condo hotels on our DSCR program. And that is huge for us right now. We just actually rolled that out in the past few months. And then as far as the lava zones, we allow, what we don't allow is zone 1. So zones 2 and higher, we do allow. So lava zones 2 and higher, we do allow here at Angel Oak.
Okay. So back to the marketing minute here. So we have all these social media posts for, let's talk about bank statements, because we're talking about bank statements. So we've developed it for you. You don't have to do anything. All you have to do is upload to whether it's Instagram or Pinterest, and these are specialized for that, Facebook or LinkedIn. And this content here is driven towards borrowers. And then if you wanted to market this towards realtors, same stuff, just the content's more directed towards realtors. This has been done for you. You don't need to do anything. The frustrating part, this is where I say it's underutilized, is, we'll get off a call like this and everyone's just, I'm just going to go back to doing what I'm doing. David had mentioned it earlier, get things done now while you're not as busy as you were. So, And then Larry, I'm going to let you talk about the whiteboard videos.
Yeah, one thing I just want to add is, this is obviously, you're not seeing a lot of volume come in on the agency side. And so the one thing that I would just add to that, John, is use this as a door opener. These are door openers for you to get in to places that where maybe they're using a specific lender out there and they don't offer non-QM, or there's some bankers that want to send you business, and if they see this content out there, then they might reach out to you. But these whiteboard videos are 60-second videos that we have made. It says nothing about Angel Oak, and it just gives you a scenario about somebody, maybe a bank statement borrower. And if you see the picture right there, and again, they're only 60 seconds, but they go through where they've been turned down from a bank, and that that we provide those options, or you provide those options, because you're the one who's posting it. So utilize these whiteboard videos. They're great. They're 60 seconds, so it's not too long. And I think that's just huge to be able to use that. So
yeah, Larry. And then last but not least is realtor presentations. And if you remember, I asked, I mentioned earlier about 9% of the deals we close on bank statements and 1099 are realtors. So what's going to happen if you get 12 realtors in a room? The odds are you're probably going to get one of their deals, because it's an aha moment. I was at an event 2 months ago, and there was she was a financial planner and a loan officer, and I asked her, I'm sorry, she was a CPA and a loan officer, and I asked her, has she ever heard of a bank statement loan for a self-employed borrower? And she said no. I was like, wow. So there's a lot of people out there who need to really learn about this underserved market. So we have a short one and a long one. We also have a flyer there. It doesn't say anything about Angel Oak. So,
yep.
So if Dawn's going to present on your behalf, and I'll use Darren because he asked a couple great questions here. Dawn's going to go in there, and I call it like the witness protection program. She's not going to say anything about Angel Oak. She's going to talk about bank statements, and she's going to say, what are you going to do when you find out you have a self-employed borrower to a realtor, and say, you're going to call Darren, because we're just one of Darren's investors. That's it.
That's right.
And she'll be your subject matter expert, and she'll talk through all of the programs that Darren has access to. Not that Angel Oak has, it's all the programs that Darren has access to it. I've done these in front of rooms. The LO that does this gets a deal, I promise you. So that's, as I said, the most powerful presentation you could provide your referral source.
Hey, John, that's great. Hey, we have about 7 more minutes.
I know.
Do you want to take a couple minutes just to talk about where they can find these borrowers,
Oh, yes, Larry, thank you. So where do you find these borrowers? Well, I just mentioned the CPA, right? So
yes.
Eric Morganson, who's out of California, he always says, so where do you find these borrowers? Open your front door of your house and you will trip over them. And I'm not joking. You will trip over. It could be the landscaper, right? You're going off to drop off dry cleaning. It could be the dry cleaner. Larry's going to get his nails done. It could be the nail salon owner. They are all over. CPAs are probably your biggest asset to getting these borrowers, because guess what? They do tax returns for self-employed borrowers.
And if you talk to 10 people, being a loan officer out there, remember, 40% of the people out there are self-employed. If you continue to say it 10 times, then you're probably going to run it across 3 or 4 people that are self-employed, which gives you an opportunity right there. So
builders, laborers, they're all,
financial advisors, they want to keep that money invested in there, and there's programs that we have that they can utilize. So,
Larry, I just bought out the one that we have a flyer for a CPA. So
yep.
It's really, there's not much, there's not a secret here. It's right in front of you. It's just a matter of you utilizing these tools. And I'm going to stop because now we only have 5 minutes. So
that's right. John, I didn't know it looks like we got a question. Do you need credentials to cover the marketing portal? Yes, you do. And you need to be approved with the Angel Oak. There's the one about lava zones. Good.
Yeah,
Thank you.
we've answered all those in condotel, so, yeah.
Okay, perfect.
So Judy, I think we're ready. There you go. Right on
Hi.
cue.
Awesome. Well, I really loved the information that you presented, and I'm going to tell you 640 FICO score, 90% loan to value, no MI, and those interest rates that you showed, 7.875. I mean, just unbelievable. Even if they were able to get an agency loan at 7.5, once you pop the MI on there, the payment's actually higher than that. Can you tell us a little bit about your prepayment penalties?
Yeah, we only have prepayment penalties on investment properties. So there's no prepayment penalty on owner occupied or second homes. And 640 score, I think will get you, is it an 80% LTV, Larry?
75.
75. So you need a 720 for 90%?
Okay.
That is
Things are
correct.
changing all the time. I'm not uncertain. They're changing all the time, so.
Yeah.
Yep, that is
Well,
correct. Yes.
And that's super aggressive anyway, because most other non-QM lenders won't even touch you until you've got 660 or 680. So that's amazing that you've even got a loan there. That's awesome.
Yep.
And what's
I
your
love
turn
it.
times on your loans
Shared
too?
about the 8
Yeah,
loans.
great
Sorry,
question.
go ahead, Dave.
Great question,
Turn
Dave.
time.
David asked about turn times. You know, a lot depends on the borrower and the loan officer, but we've closed a bank statement loan from the time it gets submitted, not including disclosures, but the time it gets submitted in less than 17 days. I would say from the time you start working with us, 30 days should be an attainable closing. So, and again, we're doing the income up front, so that's at the pre-qual stage. So you should have everything. And if we've got that far along, a lot what I see, David, I got to admit, is the time between disclosures get executed and then the file gets submitted. And then from the time the file gets submitted, it gets underwritten. We're underwriting in 48 hours. And the time it gets underwritten, another lapse in time from the time someone submits conditions. So, but we can close in 30 days. Absolutely.
And I'll go out on a limb, and I know this is being recorded, but we've closed loans in little as less than 10 business days.
Yeah.
But that's typically when an appraisal is being transferred over to us, and
Right.
that appraisal is already done. So we do allow transferred appraisals. It does have to go through an AMC and things like that, but we can turn those pretty quick. And again, it goes back to how fast do you want to close? But we're also going to put realistic expectations. We have turned down loans because somebody says they need to close in 5 days. Well, that's just not possible, you know? So that's where the delayed financing comes in. Somebody will just go pay cash for it, and then they come right back to us. So that's usually what we'll see. So, and just one thing I will add, we go do well behind hard money lenders. And give them that permanent financing. So if you have any relationships, that's another place you can find people to get more business from. So connect with your hard money guys or girls out there, and just let them know you have an exit strategy for their particular client. So
That's good to know.
Yep.
Well, thank you so much, everyone, for being here today. John, Larry, Don, amazing information shared with the team. So for everyone watching our webinar today, remember the recorded version is going to go out here shortly. And make sure that you're reaching out to Don, who is your boots on the ground here in Hawaii, to help you navigate all of these amazing products with Angel Oak. Thank you all for being here today.
Did you
Thank
want
you,
to
guys.
I
We
look forward to
appreciate the
seeing you
opportunity.
guys in
Thanks, guys.
October.
Appreciate it.
See y'all soon.
Thank you.
Thank you.